policy priorities. And I believe Mr. Griswold is virtual.
Yes, I am.
Yes. Good morning.
Good morning. Thank you, Chair Eldridge and Chair Modero. I'm Don Griswold. I was a professional enabler of corporate tax avoidance for nearly 4 decades. I worked for Warren Buffett as Berkshire Hathaway's executive tax counsel. Years earlier, KPMG hired me and 10 others to industrialize corporate tax avoidance in the 50 states. We built a 600-person group that we brazenly called State Tax Minimization, STM. We enabled immensely powerful corporations to dodge hundreds and hundreds of millions of dollars in state tax. It was all completely legal, as Carl mentioned, and it's easy. Every state's tax code is full of loopholes, including the Commonwealth. I became an adjunct professor at Georgetown Law, and at a big law firm, I defended our avoidance schemes in court. Back in college, Milton Friedman taught me that business is just a game, like chess. You execute your strategies, you never get distracted with what's outside the chessboard. But when the pandemic hit, I finally looked beyond the chessboard, and what did I see? Unhoused children, unpaid teachers, unavailable health care outside that chessboard. And I asked myself, why was I making billionaires wealthier at the expense of funding critical state needs? So I switched sides. Now I'm at CBPP, and I help legislatures close the loopholes I previously exploited. So I want to show you how my former colleagues are helping these guys dodge their Massachusetts taxes. This is Banana Company. You know, they sell banana phones and more at the banana store on Boylston Street. They net $100 billion of profits each year. So let's put $100 billion of profits into Banana Co. here, all right? Now, if Banana Co. operated here as just a single corporation, Massachusetts could tax its fair portion of the entire $100 billion. But Banana's an infamous tax dodger. So, knowing it takes 2 to tango, it sets up a second company, puts it in a tax haven like Bermuda, and then what does it do? It takes a really valuable and tangible asset like trademarks, and it puts it in the tax haven. Now that means user of the trademarks, the taxpayer in Massachusetts, got to pay for it. So royalties are going out of the Massachusetts taxpayer and into Bermuda where it gets no tax. They're greedy though, so they look for another one. How about patents that they own? Move that down to the tax haven in Bermuda, and you know, we'll put almost all of it. Maybe we'll leave a little bit of profits in there so Massachusetts thinks it's going to get a little something. Okay, so here's where your guilty bill comes in. It's a rare 2017 gift for the federal government, enhanced by some nice nifty refinements in the summer's OB3 law. GILTI stands for Global Intangible Low Tax Income. That's exactly what this is. And the federal law claws back 50% of those shifted profits. But you made a mistake a few years ago, and you adopted only a 5% clawback. So look, you're bringing maybe that much back there, right? Is a huge gift when you did that, huge gift to global tax avoiders. The bill in front of you remedies that by restoring the 50% clawback of GILTI. It's a no-brainer to pass this bill. I'm happy to answer any questions.